welcome to The Trade. Before we get to the charts rather, let's have a quick look at what traders are watching. Consumer prices in the US increasing in November by the most in 7 months. The Fed is still expected to deliver a third consecutive rate cut next week. In fact, money markets saying a near 95% chance of a quarter point cut by the Fed. Gold gaining after that inflation print came in line with expectations, boosting the likelihood of another cut. Oil settling more than $1 higher after the EU agreed to an additional round of sanctions threatening Russian oil flows that could tighten global crude supplies. We're also watching copper prices a little lower in response to a stronger greenback, pairing gains that drove the market to 1 month highs on expectations that leading commodities consumer China could relax monetary policy to spur economic growth. And continuing to watch what's happening with coffee, Brazil's top coffee roasters set to hike prices domestically from early next year after adverse weather caused raw bean prices to spike. Global prices for raw coffee soaring to record highs this week, up some 80% this year as adverse weather in Brazil and Vietnam hits the crop outlook. Let's get into the technicals with Nick Twidale from ATFX. So more jobs created than expected last month. Those workers are going to have to pay more for coffee too. What are we seeing in the Aussie?
They are indeed. Like a nice spike in the Aussie. I think that was probably more on the surprise side of things for Aussie dollar traders. I think everyone's been a little bit pessimistic at the moment. So a nice surprise top side and a good drop in the unemployment rate. So we've got a decent, 25, 30 points rally there. I still think we're going to be sold into at some point on this rally at the moment due to the strength we've seen in the dollar. Even after last night's data locked in that 25 basis point cut from the Fed, the Aussie still came off. So I think that's probably indicative. This is a bit of a surprise, I must say. We're probably going to see some offers coming in the Aussie in particular around about 64.25, 64.30. There's some technical levels coming in there. And I think there's a bit of options interest around about 64 cents. So I don't expect Aussie to take off any further than it already has done. And we'll probably fade some of these moves over the coming sessions. We'll see where I want once London gets in.
All right, I want to have a look at some of your charts you've given us though too, in terms of some of the hourly moves and I guess the resistance levels that we're seeing here. What is that showing us around that, trying to get to 65 cents?
As you can see, this is the longer dated chart. So that 65 cents is now, that's dead on the 200-day moving average. It has come down very nicely over the last couple of months, as we know, in line with obviously the Aussie move. And it has been a good sell-on rallies environment for Aussie dollar traders. I think, longer term, if you're looking at a little bit higher, so it's about 65.50 that trend line resistance comes in. And as I said, on the day at the moment, that's a slightly older chart, I think, that we've got there. But on the day, I think we'll see things sort of like starting to pull back a little bit as well. And actually, they're both they're both a little bit older, those charts that I produced you, I think. But the technical levels are sound.
Sorry about that. We might have just had a gremlin in the system. But as we see at 64.11 cents now, so we'll take that one down on the Aussie dollar. And of course, this is, sort of jumping back, as we say, because the jobs data was stronger than we were expecting, but comes after it fell through 64 when the RBA kept rates on hold this week. What does this all kind of potentially mean for the dollar, given that it did seem like the RBA was setting us up for a cut next year?
I think they are now, but we're still pricing in like quite far into 2025, especially when you look at other central banks, and we've got a couple coming out later that are expected to cut. I think we're still a little bit behind the curve in Australia, but maybe that jobs data, maybe something the RBA had a bit of an inkling that it was going to remain strong, and that will keep wage price inflation high, you would think. And then it probably justifies that the RBA are still, relative to other central banks, they're still pretty resilient with regards to jumping into that rate easing cycle. How we trade the Aussie, it's a little bit difficult to say, because if we do see them change, and we did see it on Tuesday, that that was a dovish tilt. We did get the Aussie hit. I think we could see the Aussie really come off, and I haven't brought it up on the charts at the moment, but the crosses, the Aussie's looking a little bit weaker as well. So sterling Aussie went through the magic 2 number. Yeah,
let's have a look overnight at whether we've got your correct sterling chart. Sorry about that, Nick, with the Aussie ones. But
it might have been my fault, I think.
Is that what you want?
That's the cable. Yeah. So I think we were just going to look at a couple of the other majors. Similar to most of the majors, we've seen the dollar appreciate and sterling's come back from sort of 135. Sterling's been pretty resilient recently against most of the other currencies. So euro sterling's dropped, Sterling's been appreciating against most of the other majors, to be honest, including the yen. So we've not got too much in terms of data today with regard to sterling, but with cable we've got some US numbers coming out. So if PPI confirms what we got from the CPI last night, then they're going to cut next week. We know that.
Yeah, and the ECB potentially cutting tonight. So what is the euro showing us?
So the euro's coming through. That's also been offered, as we can see, but it's had a nice sort of spike recently. And this is the daily chart again. We're into still the bottom quartile of that recent range. I think it's going to come down, like most of these central bank decisions today and in the next few weeks, to the forward guidance we get from the ECB. We've got some parties, the French, I think, are calling for, and not surprisingly, 50 basis points. I don't think we'll get 50 basis points tonight from the ECB. I think we'll get 25. It will then come to that forward guidance. If they are a bit concerned, and we've still got the Russia-Ukraine situation and the EU through more sanctions with regard to oil at Russia overnight, I think these aren't particularly positive things for the euro. So I think we do still look to sell euro on rallies, especially in line with the other side of the equation, which is the US.
All right, Nick, always a pleasure. Thank you so much.
Thank you.
Nick Twidale from ATFX.